Good morning, traders. It is 8:01 a.m. Chicago time, 9:01 Eastern on Thursday, June 1st. It is June already. 5 months are behind us this year. We're about at the halfway mark here and into the summer months where trading just gets even slower usually. Hopefully we get some surprises this summer like we did 2 years ago with the China issues. Anyway, derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I want to remind everyone that I did put out a notice on Twitter. I'm not sure if many of you saw it, but it, uh, the Treasuries have September as the front month now. September 2017, the symbol is U7 or U17 in most platforms. That is the front month. If you're using something like that's feeding off of DTNMA, IQ Feed, and so on, make sure you do a full data download and restart your charts so that your charts can be backwards adjusted with the equalized price. With the rollover price today. Anyway, again, treasuries are trading September 2017 currently. Rollover in the indices occurs next Thursday morning at 8:30 a.m. Central, 9:30 Eastern, June 8th. We will start trading the September contract in all U.S. indices. And then, of course, the European indices don't roll over; they just simply expire on the morning of, and then you switch to the next contract. So it'll be the third week of June, expiration day, quad witching day, June 16th, when those products move to September. So just making sure you're trading the right contract as you're trading along. Not sure if I said this already. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance currently is just about slightly positive. It is the market is allocating to risk this morning. We are hanging on, and we'll look at this in a minute. But we are hanging on to this MC point of control in the S&P 500. Remember, 2413.50 was the key price yesterday. It is the close basically of yesterday. It is the pretty much was the current price until just now. Um, and so it's nice and steady today. Yesterday's action was very interesting. We'll talk about that in a minute. But for the time being, gold's getting hit, trading at $1,265.80, down $9.70 or 0.75%. Crude oil is almost flat to slightly up 13 cents, 0.27% at 48.44. Crude had some really cool moves yesterday. I'm enjoying that product. And the dollar is ahead today. The dollar's up 0.29%, up 28 cents on the U.S. dollar index, trading 97.13, 13 and a half. So that's where we are currently in the news. A couple of interesting things. The polls for the UK election, which is next week, have tightened even further. The spread between the Conservative Party and the Labour Party has gone to 3% in the latest poll. This is a YouGov poll. Now, there's a caveat here. I think polls should come with disclaimers these days, given how terribly off the Brexit poll was. The Brexit polls were, and the U.S. election polls were. The French polls were slightly better in predicting who is likely to take the lead. But here, the spread has tightened from I think about 7 points to about 3 points. That's going to be a very interesting outcome next week. We'll see. We may see some of the if May loses, we may see some of the steps taken by her government to reverse since last June, the Brexit election, which was a year ago. Um, Turn on my news feed. Iron ore had one of its worst months in a while. For May, the commodity fell 17%. It hit a low of 7 months yesterday. Also, it looks like Hewlett Packard had double-digit drop in hardware sales, down nearly 13% of 6.24 billion. This will likely affect the Nasdaq and the S&P. And overall, looking ahead at what the market's reporting now this morning, we got the ADP employment, and I spent a little bit of time looking at this number, right? The May ADP employment change came in at 253,000. The expectation was 180,000. And I just want to talk about this for a minute because the ADP employment, ADP is a payroll processing company. It's a private company that processes a large number of private payrolls, and it's putting out its prediction just a day or usually 2 days on a Wednesday versus the Friday non-farm payrolls, and it's used as a precursor for the non-farm payrolls. The only correlation I find between ADP and the non-farm payrolls is the potential, the trend, really. It does not correlate very well with the actual numbers. I went back for 2 years, so that's only 24 months of sample size, which doesn't have a very high confidence interval there. But it's just looking at this thing, it doesn't seem to correlate very well. I'll look at that in a minute. Initial jobless claims came out this morning at 248,000 versus 238,000, which is slightly worse. Continuing claims at 1.92 million, in line. And then looking at what's expected going forward, we're getting U.S. manufacturing PMI final for May, expecting 52.5, and that comes out at 9:45 Eastern. At 10 a.m., we get construction spending, U.S. construction spending for April at 0.5% expected. Also at 10 a.m., we get ISM manufacturing for May, expecting 54.6. We get the natty gas at 10:30, expecting 81 billion. And then we get crude oil inventories at 11 Eastern today. Because of the Monday holiday, crude oil gets shifted 1 day and a half hour. So it comes out at 11 today. Crude oil inventories expected at a draw of 3 million on the crude. Distillates expecting a draw of 650,000, and gasoline is expecting a draw of 1.5 million. So let's rip through here and look at real quick what the ADP reported. I'm not going to spend much time on this. I'm already 9 minutes in or 8 minutes in. Here's the ADP. So they reported 253,000 this morning, okay. Last month they reported 177,000. The prior month, so lower last month. Then March, not last month, April. March they reported 263,000. February 298, and then January 246. Now contrast that with what the non-farm payrolls reported. So I don't know if I can put these side by side here, but this is the non-farm payrolls numbers. And if I scroll back, so this morning they reported 253,000. We're getting non-farm payrolls this tomorrow morning. But if you look at April, they reported 177,000, which was a drop from 263,000. So that's clearly nowhere near the 211,000 that came out in April. The consensus was for 185,000 that came out at 211,000. In the ADP went to 177,000, which was a drop from March. But you look at March came in at 98,000 on the non-farm payrolls versus a consensus of 180,000. Yet the ADP showed a strong March and a drop in April. Non-farm payrolls show a weak March and a rise, a pretty good size rise, almost 3 times in April. You go back to February, we have another pop at 298,000. February we got 235, so we rise again. So we're following the pattern. But if you go back and you look at a few months of these correlations, and man, I don't, there's some way I'm not reading the report right or something, but I'm not seeing any correlation other than this month versus last month, and then the next month versus last month, and so on and so forth. That's pretty much it. It's not even close. I looked at percentages. I'm not sure why the market would react to that number. It really doesn't seem to have a very clear correlation. If anybody knows a way that these are correlated, can be used to help give us some prediction of what potentially could happen with non-farm payrolls, I'd love to hear from you. Again, hit me up on Twitter at FuturesTrader71 or on my website at FuturesTrader71.com. Here's what we expected yesterday. Yesterday was looking for strength. That did not happen at all. I was a bit of a sucker punch there, but as always, the market could do anything. Anything could happen. But yesterday was looking for a drift, an open auction drift down. A drift down to 24.1350, which was the key price here. That is the MC point of control, the sharpest volume price in this sector. And then we're looking for a rotation up. The target was 24.25. That's what I was looking for. Hypo 1, this was completely off. The market did not agree with that idea at all. It agreed with Hypo 2, but it did not have an updraft before the drop. Okay, so this was off as well. What ended up playing out. Now we ended up right here in the back into the middle in the 24.1350 area on the close. What ended up working was Hypo 3, which I talked about but didn't draw. Hypo 3 was a quick test up and then a drive down, and I was looking for the 23.9875 area as a potential first bounce area on Hypo 3, and that was really the plan that worked out. Was looking for impulsive movement down, and that's basically what we got. Here's what yesterday looked like. We open. We have this tiny little right here, tiny little auction going on. It tests up, drops down to the 24.13 even, and then goes right back to the opening print, which was 14.1450, and then we have an impulsive pullback, a bigger impulsive, and then we have a weak bottom. This is what's tricky these days about these sell-offs. They tend to not operate like a normal auction does, in that under normal circumstances we have this big impulsive move, we have this weak low, we have volume, a fair amount of volume at the low. We don't have a taper in volume. In other words, we don't have dry up in volume, and then it starts to consolidate, and in general we look for a consolidation back to a key level. This would be the prior day's low or the mid. The prior day's low was nicely primed here because it became the point of control, and it had VWAP in there, although I don't initiate off of VWAP. And then the expectation is the market starts to drift down and then finishes this move down with an extension down before it gets corrective and moves back up. The corrective move up I was anticipating. I talked about it in the SFAC chat room. I said that I'm not expecting it to go lower before pushing to 24.10, 24.10 even, and it pushed to 24.10 and a quarter. But then I expected the rotation down to extend this before it starts to run up into the close. And instead, what it did is it just went sideways for pretty much the European close all the way into the closing range. It went sideways and then started to drift up into the close. We have a profile that's showing very little consensus on a particular area. We have three distributions, a small one. The point of control shifted on the close, but the shift on the close happened on a very interesting activity. And then we have what was the point of control for most of the session. The point of control was right in this range here, pretty much for most of the session. So we don't have consensus here. We have a multiple distribution profile that is compressed. Yesterday we could not fulfill the IB stat. Okay, the IB stat says that Again, past performance is not indicative future, not necessarily indicative future results. But the IB stat says, looking back 2,000 days, uh, if you did this historical study, you'll find that we break the IB high, the IB low, break. In other words, we don't just touch it, we breach it by at least a tick. We break it approximately 97.2% of the time. Okay? So we put in the first hour's trading, and then we generally breach one or the other. Ran out of time here. It ended up breaching on the overnight, but that doesn't count. And yesterday, we traded that 2.8%. The prior day, we held this 3% statistic was held here, and it was held here too. 3%. It's unbelievable. We don't see that often where 2 days in a row we hold a 3% statistic. In other words, we're betting against a 3% probability 2 days in a row, and then we're betting against a 2.8% probability the day after that. Yesterday definitely broke the overnight high and low, so the overnight stat was fulfilled. The IB stat instead was not. The IB stat was fulfilled here on these 2 days. Right there, it broke the IB high. Just some interesting things going on. It's hard to read into it and determine what the deal is here, but I found that very interesting. Also, if you look over here, you'll notice, ooh, I like that, the way it became straight like that. Notice how price is moving up, but large lots were sellers to small lots. Small lots pushed higher into the close, whereas large lots did the selling right in this move here. Large lots did the selling, and then they went completely sideways and were not active and did not participate in this next leg up. We see also that the volume, as I had warned in the morning trader bite yesterday, I know I'm getting long in the tooth here with the time, I had warned not to fade that closing move. Look at the volume there. The volume's about 60% higher than the 20-day median or mean on both the last 15-minute bars. So from 3:45 Eastern to 4 p.m. and then from 4 p.m. to 4:15 when the pit closed, the volume was very high. It was 2 times on the last bar. It was about 60 something percent on the closing 15-minute bar. So what we have is the end of month balancing, the market pushing up while the delta was dropping. Okay, the size was dropping on delta. Small lots were trading higher, so small lots were covering, but the overall large players held on and were selling and then steady sideways into the close. Just some interesting stuff there. Can't read into it yet because it is the end of the month. And remember, futures are a hedge product. One last thing, what have we done in terms of market profile? We have shifted, so we have complete balance these 2 days. We shift the point of control down on Tuesday. And then yesterday we shift the point of control down even further, and then we finish above these points of control. So we have a reversal. This low is the singles or the excess high that was left behind from the 24th. We tested it to the tick at 24.0275 before we started to turn up, and then you can see that the one-time framing resumed to the top side. So here's B period. This is the first half hour. This is the second half hour, and then from there on out, we kind of go sideways. But then when the closing trade occurs, we have strength all the way through in the last 3 periods. We have M, N, and P periods all pushing higher. To me, this really indicates that we are likely to continue to rotate up and to tackle higher prices. I would caution shorts. What did we do overall yesterday? Overall yesterday we opened around that point of control, the MC point of control here. We tested lower. We tested the base, the LVN and the base that was left behind from the 24th, like you saw in the market profile, and then the market held sideways and turned up, and this is likely to continue higher. We have sucked in more shorts, in my opinion, to continue this energy up. The profile here is likely to be built a little further before the break higher. And then the targets, I did some measured move targets yesterday. The first target's 19 quarter, and I'm looking for 22.25. These are not resistance levels. These are targets based on how the market has coiled so far. That's enough of that. Let's get to our hypotheses. This morning, the hypothesis is going to look almost exactly as what we had yesterday. Open auction that starts to move down. I expected not to exceed the 24.12 area. I'm looking for it to base. I'm looking for the market to start grinding up into the close. We have non-farm payrolls. We have non-farm payrolls coming out tomorrow, and so I'm looking for the market to make a move on the close. That's a primary hypothesis. If we open higher and we test the 1775 for all-time highs and we start to move below the opening swing, then look for 24.11 and then a little bit of a push through, and then I'm looking for it to balance and finish at the 24.1350 to 14 again. So that's hypo 2. I'm not going to go over the trending hypos. Trending 3 is looking for a push up and down, which is like yesterday. Trend 4 is looking for a push down to 24.11, and then market starts sweeping up to 22 quarter and 25. That's what I have for you. Good luck today. Remember, next Tuesday we have a convergence event. We're going to go over IRT and the latest features and statistics. And then Wednesday we have an AMA with Futures IO. Very busy week. Good luck, and I'll catch you tomorrow morning. Don't forget, it's non-farm payroll. Take care.